Hello everyone, it's Steve with Aptera Owners Club. Today, Aptera made this press release, which was Aptera catalyzes growth with Marathon Capital. And so that was today, June 8th. Aptera Motors has retained Marathon Capital LLC, the leading clean tech investment bank in the U.S., to facilitate the company's proposed Series B capital raise up to $200 million. Marathon Capital will assist in positioning Aptera for its continuous and rapid growth on the heels of several notable supply chain agreements and a goal of ramping to full-scale production of its solar electric vehicle in 2023. This cooperation comes as Aptera announces 23,000 vehicle pre-orders, representing potential future revenue of more than $800 million. Marathon Capital is uniquely suited to strategize the next phase of Aptera's funding objectives. And then a couple of statements from David Kirkpatrick and Janie's Berlin's game talking about how great this is. Okay, so a couple of questions I had after reading this is, what is Series B capital raise? Who is Marathon Capital? And why are they uniquely positioned? Also, I looked at this 23,000 vehicle pre-orders. So their vehicle pre-orders are going up because they were previously at 22,000 just like a few weeks ago. So I think their pre-orders are ramping exponentially. And then this revenue of 800 million, this, if you divide this by this, they're assuming that the average pre-order is for like $36,000. So it looks like most people are not ordering the base model. Most people are ordering at least the 400 and and a couple of other options. So the average pre-order is in near $40,000. Okay, so what is Series B capital? Okay, so basically the way that fundraising for startups work is the first round is seed money. Seed money is usually put in by the founders and their friends and their family. And then once you get seed money and then you start your company and you have a business model, then you go into Series A. And Series A is basically startups. They really don't have anything going, but you're giving them money to get the business started. And a lot of companies fail in Series A. So Aptera has been very successful in Series A. They've raised over $40 million in Series A, and now they're moving to Series B. And Series B means that they've met some metrics that makes them think that it's a less risky business and that they look like they have a viable model and they're going to make it as a profitable company. So they're going into Series B. And I guess that they're saying that that the metrics they have met is that they've made notable supply chain agreements and their engineering has gotten to a phase where they feel like they can go to Series B and get some investors that are a little bit less risk tolerant. Series A funding is a very high risk because you don't know if the company is going to make it. I mean, we still don't know if the company is going to make it, but with Series B, there have been some notable metrics that have been met, in this case, supply chain agreements and engineering benchmarks. So they think that they're going to do it. Why are they going to this and why are they getting Marathon Capital involved? Um, at at first, I thought Marathon Capital was maybe underwriting the IPO, but that doesn't seem like that's the case. If you look at Marathon Capital, so they are a small investment banking firm. I think they have less than 100 employees. Um, they they specialize in doing a sustainable energy, clean tech, that kind of stuff. And they're in the areas of mergers and acquisitions, capital raising. That's what Aptera is using them for. Project finance. That's like financing large, um, uh, like wind farms and things like that. That's not what Aptera is doing. And tax equity advisory. That's not what they're doing either. If you look at this, they're a leading strategic advisor for sustainable energy technologies across the globe. So maybe that's why they're positioned well. And this is the kind of stuff that they do in terms of corporate asset and financing. They do corporate equity and debt. This is what they're doing. They have some expertise in SPAC and IPO, but they don't do any underwriting. I think they're too small. They're much too small to do underwriting. They're not a big enough investment bank to do the underwriting for an IPO. That would have to be like Goldman Sachs or some much bigger investment bank. So I think what they're doing is because Marathon Capital is interested in doing sustainable technologies and energy, that kind of stuff. They have a lot of relationships with investors and venture capital firms that are interested in that kind of stuff. So I think Aptera is hoping to leverage their connections to raise more money. And the other thing is they've raised most of their money through crowdfunding, through issuance. And if you look at there, they have raised 44 million of 75 million. And why does it say 75 million? Well, that's because this Regulation A comes from a 2012 bill that was a Jobs Act that allowed, one of the provisions of that law was that it allowed startup companies to raise money from anybody. Before, you had to be what's called an um, accredited investor. You have to be fairly wealthy to invest in startups because they wanted to protect people who are not as wealthy from investing in very risky startups. However, they made a Regulation A, and then you can now do crowdfunding. This is the regulation that allowed for crowdfunding, and Aptera has had a very successful crowdfunding route. But you can only raise up to $75 million as a tier two. So that's why this cap is at 75 million. And I think Aptera realizes they need to raise more than 75 million to make it to production. And I think they're still going to continue to do crowdfunding, but they're hoping that Marathon Capital is going to help them link up with venture capitalists and private equity groups and other people that have capital to try to raise money for them. And then perhaps they are going to help them go into a SPAC and go IPO because I mean that is their goal is to eventually make it to IPO either through traditional underwriting or through a SPAC. So I think from a financial standpoint, that means that Aptera is still trying to progress. And of course, we've talked about it in previous videos. The capital markets are really tight right now. I read another report and heard a podcast today about how the capital markets are drying up and startup companies ideally should have 12 to 24 months of cash on hand to survive. I think Aptera, unfortunately, is at a phase where they need to ramp up and hire people to make it to production. So they need to spend money now to make it to production. But unfortunately, capital is drying up right now. Hopefully, Marathon Capital is going to help them by connecting them with people that are interested in financing these kinds of projects and these kinds of companies, and they'll be able to raise the capital to make it to production. It sounds like Aptera is making all the right moves. It's just kind of a difficult time in the financial markets for them to be at this phase of their development. Ideally, it would have been nice if Aptera was doing this a year ago when the capital markets were really good and it was very easy to raise money. It did help them out in Series A, but it might have been nicer to be in Series B about a year ago. Anyways, I thought that was pretty good that they found an investment bank that they can partner with, and this investment bank is specializing in the kind of tech that Aptera is involved in, which is sustainable technologies and solar energy type things. Marathon Capital, if you look at their portfolio, they do a lot of solar energy stuff and a lot of clean tech. One of the companies that they helped with was a semi truck company. It's a Hyleron, and they went IPO by SPAC. Of course, they're getting crushed by the market now. I think their stock price is down to 3. They started at 10 with the SPAC and then went up to like 50 almost, and now they're down to $3 or $4 a share. But anyways, Marathon Capital does have some experience taking these startup transportation sustainable technology companies to IPO. So yeah, I think they're making all the good moves, and hopefully they will be able to raise enough money to make it to production. All right, well, tell me what you guys think about whether or not you think Aptera is going to be able to raise enough funds to make it to production. I certainly think they will, and I hope they will as a Series A investor myself. And of course, we all love the vehicle, so they need the money to make it to production. Um, Huge thanks to our supporting members, and thanks to all you guys who are watching. Have a great day.